All right, let's dive into a topic that might sound a little dry, but is actually a pretty fascinating story of control, accountability, and even constitutional duty. We're talking about federal accounting. And trust me, this is not your typical bookkeeping. It's a unique system built for a massive and very specific purpose.
I mean, that's the fundamental question, right? When you're dealing with a budget so vast, it's hard to even wrap your head around. How do you keep track of it all? The answer is a special system designed for one reason: to make sure every single public dollar is spent legally and responsibly, exactly how Congress said it should be.
So, to really get this, we have to start by understanding that government accounting and business accounting are playing two completely different games. Their primary goal isn't profit, it's something else entirely. And this slide right here really lays it out. A company asks, are we profitable? But the government has to ask, are we compliant? It's not about making money. It's about faithfully carrying out the budget that was legally approved. You could say it's about stewardship, not sales. This brings us to the absolute heart of the matter, a really brilliant dual-track system. For every single financial thing that happens, there isn't just one record. There are two, kept in parallel. This is what I like to call our tale of two ledgers. So ledger number one is for proprietary accounting. The easiest way to think about this is as the big picture ledger. It keeps track of assets, things like federal buildings or national parks, and also liabilities like public debt. It basically gives us a snapshot of the government's overall financial health, a lot like a corporate balance sheet. Now, ledger number two is what makes government accounting so unique. This is for budgetary accounting. I call this the permission ledger. Its one and only job is to track the legal authority to spend money and make absolutely sure that no agency spends a dime it isn't legally allowed to. Okay, so how do these two ledgers actually work together in the real world? Well, to see that, let's follow the money. We're going to trace its journey through 5 key stages, from just an idea in Congress all the way to a final payment from the Treasury. This right here shows the whole chain of custody for public money. First, it starts as an appropriation. That's the law from Congress giving the legal authority. Next, the Office of Management and Budget, or OMB, apportions those funds, usually breaking them up by quarter to prevent an agency from spending its whole budget in January. Then, the agency takes its piece and makes allotments internally. It's only after all that an agency can obligate the funds by, say, signing a contract. The very last step is the outlay. That's when the cash finally leaves the Treasury. So let's make this really concrete and see how it all comes together. Let's imagine a federal agency needs to buy $5,000 worth of new computers. How does this one simple purchase ripple through our two ledgers? Okay, time to see the magic of the dual entry system. This one purchase is about to create two totally different but perfectly synced stories in our accounting books. So first up, the budgetary story, the permission side. The second that contract is signed, the agency's legal authority to spend, its allotment, immediately shrinks by $5,000. That money is now officially obligated. This ledger confirms, yep, they had permission to spend it, and now that slice of permission has been used up. At the exact same moment, the proprietary ledger gets updated. Here, the agency's assets just get transformed. Cash in the Treasury goes down by $5,000, but its physical assets, the new equipment, go up by $5,000. So get this, the agency's net worth hasn't changed at all. It just swapped one asset, cash, for another, computers. So you see, this dual system means nothing gets missed. The budgetary ledger is all about making sure the rules were followed, while the proprietary ledger tracks the agency's actual financial position. They work together in perfect harmony to give a complete and totally accountable picture. So you might be wondering, why go through all this trouble? Why this incredible complexity? Why not just use a simple checkbook? Well, the answer goes way back. It's tied to a powerful principle written right into the U.S. Constitution. This isn't some modern accounting rule. This is a constitutional mandate. This entire two-ledger system that we've just walked through, it's the modern machine built to fulfill this 200-year-old promise of transparency and accountability to the American people. It's an incredibly powerful system for control and for oversight, for making sure that government follows the laws set by Congress. But the ultimate challenge is still out there. How do we make this mountain of data not just available, but truly accessible and understandable to the very people it's meant to serve? That continues to be the big question for government transparency. Thanks for joining me.